Accounting is a joke where it kind of makes sense so you can make dollars. Today we're going to take a look at a walkthrough exercise on how to properly utilize financial statement analysis by calculating the gross profit percentage. So if you're unfamiliar with financial statements, don't fret, gang. I dropped a link to get you up to speed in no time. So with that being said, let's get it. So it tells us that McCarthy Landscape Supplies selected accounts as of December 31st, 2024. So let's take a look at that. And it basically gives us some information, some expenses, revenues, administrative, income statement information, gang, revenues and expenses. Then it wants us to compute the gross profit percentage for 2024. Easy breezy. The gross profit percentage gain is one of the easiest financial statement analysis tools that a person could utilize to find out how much profit is being earned on the inventory being sold or flipped. Remember, gang, inventory is an asset once it's purchased, but the minute that it becomes sold, an expense arises called cost of goods sold. That cost of goods sold expense is important because it allows us to calculate how much profit the company is earning based on the sale of the inventory, i.e. gross profit. Our gross profit is important because it's the very first part of our income statement that viewers reveal. Why? Because the minute that we report our sales revenue right under it, gain for a merchandising company, we will report our cost of goods sold so that we can understand what's the gross profit. And so with that being said, this is an easy tool, this particular ratio, for us to identify how much of the percent of profit we're generating based on the sales. Thus, our gross profit percentage calculation, i.e. gross margin percentage, is basically taking gross profit and divided it into net sales. So with that being said, let's rock and roll with this problem. So they want us to calculate the gross profit percentage for 2024. Easy breezy, gang. We're going to take our gross profit and divide it into our net sales revenue. We're going to check our answer. Excellent job, gang. And now they want us to calculate the amount. So based on what the table is giving us, we see our net sales revenue is $134,700. So let's input that. So in order for us to calculate our gross profit, we must take our net sales revenue and subtract our cost of goods sold, which is $114,000, thus giving us a gross profit amount of $20,700. Once we take our gross profit and divide it by the net sales revenue, our gross profit percentage should equal 15.4%, gang. So how do we interpret this? Simple. For every $1 we're generating in sales gain, we are receiving a gross profit of 15.4% or 15 cents and some change. So is that a good or bad thing?
Hit me with it. Just give it to me straight.
Anytime we're performing financial statement analysis, we must recognize comparison to the industry that this particular company is in, as well as the leading competitors of its peers. So I can't answer that question just yet because we don't know what the other landscape companies are doing. However, we do understand that we must have an adequate level of gross profit gain because we haven't quite yet finished deducting all of the operating expenses that occurred throughout the period. Remember, we're trying to get to the bottom line of the income statement, which is net income. And there are several more expenses that must be deducted from gross profit. So with that being said, the higher the gross profit gain, the better. And that's the truth.
Yes, definitely.
So we're going to check the answer. Nice work, gang. So there you have it, gang. A quick and easy illustration of how to properly utilize the gross margin percentage or gross profit percentage formula. If that light bulb clicked, which I know it did, gang, hit the like button, hit the subscribe button, and share the channel with your friends so they can chase this bag as well. As always, gang, I'm Dr. Who, and I truly appreciate your time and patience that you share with me, and I'll see you soon. Bags!